What if the money in your bank account is not actually there? What if the digits you see are not savings but promises your bank cannot fully keep? What if banks silently create money every time someone takes a loan? Today we uncover the hidden printing press operating inside your bank. This story begins long before smartphones and modern banking apps. It starts in a world where money meant metal. Gold coins clinked in pockets and silver bars filled chests. People trusted wealth they could touch and feel, but carrying metal became dangerous, slow, and inconvenient. Goldsmiths offered vaults to store metal safely. In return, they gave receipts confirming the deposit. Over time, people began trading the receipts instead of the gold. The receipts became a new form of currency. Then goldsmiths noticed something surprising. People rarely came back for their gold all at once. Most deposits stayed untouched for months or years. A question changed everything. Why not issue more receipts than the gold actually stored? Those extra receipts became the world's first invisible money. Money created without metal or physical backing. People accepted the receipts because they never suspected the trick. This was the birth of fractional banking. It worked until too many people demanded their gold back. When that happened, the illusion collapsed. Runs started and vaults emptied fast. Governments stepped in to control the chaos. They did not ban the illusion. They legalized it. They called it fractional reserve banking. Now banks could officially lend more money than they held. Deposits were no longer stored. They were multiplied. Here is how the illusion works today. You deposit money into your bank. You assume your bank keeps it safe. In reality, the bank keeps only a small fraction. The rest is lent to someone else. But you still see your full balance in your app. And the borrower receives the money you thought was yours. Two people now believe they have the same money. This duplication is modern money creation. Loans create deposits. Deposits create more loans. And the cycle continues endlessly. Once gold was removed from the system, the illusion grew stronger. In 1971, money became pure, fiat. No backing. No metal. Only trust. Trust in banks. Trust in governments. Trust in numbers on a screen, with no gold limits. Banks expanded lending massively. Credit became the engine of economic growth. But credit is also the engine of financial crises. When loans expand to fast bubbles appear. When borrowers fail, confidence breaks. When confidence breaks, banks freeze. This happened in 1929. It repeated in 2008. It appears again in modern liquidity shocks. Each crisis reveals the same truth. The money people believe they have is mostly imaginary. Governments rescue banks to keep the illusion alive. Central banks inject liquidity to prevent collapse. Taxpayers pay for mistakes they never made. Reforms are introduced, but they only treat symptoms. Reserve ratios shift slightly. New regulations appear, but the core mechanism stays untouched. Banks still create money through lending. Deposits remain recycled claims, and collateral is reused again and again. This creates ghost money in the system. One asset can back multiple loans. One promise can support several obligations. The illusion becomes deeper with each layer. Today, only a tiny portion of global money exists as cash. Most money is digital credit created by banks. Savings are not sitting in vaults. They are circulating around the economy. They are spent, lent, and relent many times. Your balance is only a claim, not actual stored cash. The system works as long as people believe in it. Confidence is the true currency. When confidence falls, the entire structure shakes. Inflation exposes the illusion slowly. Bank runs expose it suddenly. Governments hide it with complex language. Banks hide it with digital interfaces. But the mechanics remain the same. Here are the takeaways. Money today is a creation of credit, not cash. Savings are liabilities for banks, not stored assets. Crises are natural outcomes of a system built on confidence. And here is the warning. The next crisis may reveal just how fragile the illusion truly is. If you learned something new today, subscribe for more hidden truths about money. Share this with someone who still believes their bank holds their cash physically. Stay curious, because understanding money is the first step to protecting your future.